Let's see if this sounds familiar at all. You just recently bought a house, and you know for a fact that a buddy or a family member who has roughly the same income and credit as you also bought a house for around the same prices, same situations, but your buddy got a much lower interest rate and a much better terms on his mortgage than you did. So what's the difference? Why are there so many different options out there? And what is the difference between a mortgage broker, a mortgage banker, and a retail mortgage lender? Why do so many different banks and lenders have all kinds of different interest rates? Being in the industry for 11 years, you would think I would know more than the most person about this. And the good news is I actually do. I think a lot of people are not aware how mortgage companies work, right? What are the different models between like walking into a bank like a Wells Fargo or a Chase or a Bank of America and asking for a mortgage loan compared to like a retail lender like Loan Depot or Guild or, People's Mortgage, one of those guys. And then you've got the mortgage brokers, right? Those who can shop with multiple different mortgage companies. And yet everybody has different rates, different fees, different loan types. How are you supposed to make a decision as a consumer as to what the best deal is for you, right? That's what it comes down to. What's the best deal for the client? Or if you're a loan officer, what's the best deal for the loan officer and the client? For the client to get the best deal and loan officer make the most amount of money? That sounds too good to be true, right? So here's what I did. Huge fan of ChatGPT. Love AI tools. I use it as my personal assistant all the time. So I asked a very simple question to ChatGPT. I said, can you explain to me the differences between a broker, a bank lender, as well as a retail lender? What are the differences? Whether your mortgage comes from a bank, a direct lender, or a broker, it usually ends up in the same place. Fannie Mae, Freddie Mac, or Ginnie Mae. These agencies, they all pay the same commission or they pay the same amount to the loan officer or to whoever is selling their loan for a certain rate, right? So if they all end up in the same place anyway, if the investors are the ones buying them and they all get bundled up and thrown into a mortgage bond coupon, which is just made up of hundreds of thousands of mortgage notes, why is there such a drastic difference between rate? And what is the difference in companies and how they operate? So I can speak from experience because I have worked at every single one of these locations. I started my career in a bank, working for Wells Fargo as a mortgage lender. And that's where I made the least amount of money as a loan officer as far as pay goes, but I felt like I was able to offer pretty decent rates and terms and things to my clients. Then I moved over to Loan Depot. It's a retail bank lender. I was paid a lot more per loan, but I noticed that my rates weren't always as good as like the banks were. I think I might have been ripping my clients off a little bit, right? I was getting paid more, but they were paying for it. Why is that? Don't worry, we'll get into it. And then finally, you've got mortgage broker, which is what I am now. I am a mortgage broker. I work with over 280 different lenders nationwide. I have access to all kinds of different programs. I get paid more per loan now than I've ever made before, even with working at the bank, even with working at the other locations. But I can still offer way lower rates and way lower fees than anything I was able to offer anywhere else when I worked there. So how is that possible? How can I make more money and offer my clients a better deal? That shouldn't work that way. Here's why. If you walk into a nice, big, fancy bank office, your interest rate help pay for all of that. If there's a physical location that you have to go into, place usually has a rent or it costs money, right? Those are expenses for the business. They cost money. You look at a bank, they've got multiple different avenues, and mortgage is just one small piece of their lending pie, right? They have consumer loans. They've got other ways. Banks, if you look at how banks make money, they do it based off debt. They get it from you in interest. Then you've got your retail lenders, right? So when I was working for Loan Depot, they were a private company at first and then they went public. So they, are now available to buy as a stock option. So what happens is you've got all of these different layers of management, right? You've got your CEOs, you've got your owners, marketing directors, chairman of the board, area managers, regional managers, marketing, compliance, HR, this and that. And because they run all their own stuff, they've got in-house underwriting departments. They've got all these layers of salaries they have to pay, assistants they have to pay, assistants, managers. How many people are getting a piece of that pie on the retail side is insane to me. Like the loan officer that is helping the client that usually is getting it themselves, right? Most of these companies don't provide leads. So we're out there doing the grind. We're making the relationships with real estate agents. We're going to networking events. We're posting videos online. The programs that I'm able to offer, because it's all in-house at the retail mortgage company, they decide the terms, right? They decide the rates. They would have something called a pricing exception or a PE. If you work in the retail mortgage world, you know exactly what this is. If you have to ask for a PE, you're basically asking if the company would be willing to make a little bit less money on this loan so that you can offer your client a better rate or lower fees. And we would have to go to bat all the time. Ultimately, at the end of the day, a business decision, right? The company or the manager or the higher up manager or whoever, however many levels, they look at it.
I guess we'll make a little bit less on this one, but we're gonna get more, so it'll all work out.
Because of all these people that have to get paid. You've got rents on the building if you're walking into a location. You've got salaries for the underwriting manager, the processing manager, the assistant, and that all is taken out of the interest rate that they can offer you because they need to make money too. They have to be profitable. So here's how brokers work. I don't have an in-house underwriter that I pay a salary to. I don't have a branch manager. I don't have an area manager. The company has a CEO, but his name is Mike Cordes. And what he did is he decided, stop with all the greed, right? Like we don't need all these extra layers of management and people, especially for like payroll, HR, things like that. At the end of the day, we want to help our clients get the best possible product. I want to know that I'm offering you the best possible rate and the best possible fees, but I also want to make sure I get paid for that too. And all Mike did over here at Nexa is we cut out all the middlemen. He makes it so simple from a compensation standpoint. I just respected him so much for how transparent he was with this company when they first brought this concept to me. He truly found a win-win scenario to where, again, as loan officers, we can make the most amount of money per loan, but we can also know that we're giving the best possible deal to our client because we don't have rents to pay, right? We don't have managers to pay. We don't have all these other middlemen that need to get their cut. It goes just from me to the client to the lender. Mike Cordes over at Nexa is very clear about his cut. He's like, look, I take this amount right here. This is what I get off every loan, no matter what. Because he's giving us access to his platform, the program, the organization of it all. That doesn't happen by accident. So he put all that together because he knows that he's going to make plenty of money as long as he keeps hiring more people that are doing good loans. Again, it's a win-win scenario. The loan officers can go in and make the most amount of money they've ever made in their career, but also pass on that savings to the client. And if you want to grow your business as a loan officer, you have the ability to do that. You can run it the way you want to run it. If you don't want to be the loan officer that does everything from start to finish, you can hire people to do some of that for you, and then you give them a bigger piece of the cut and take a smaller one, or vice versa. Like, you can run it how you want to run it. We're just trying to do a good job for the people that we work with. For my real estate agents, for my partners, they want to make sure that that loan's going to go through. There's not going to be any headaches, that the communication's going to be clear. It's going to be a smooth process. And we have established that. And then for everybody else involved, right? Like, they don't need to see all of the craziness. They just need to know that they can get a loan, it's gonna go through smoothly, and that it should be easy, and that they know exactly what's happening every step of the way, and that they're getting the best possible rate. And I truly feel that I have now built that, and we have that over here at Nexa Mortgage. So what does this mean for you? Why do you care about this, right? It just means that you have options. I wasn't aware of all that went into all this in the mortgage world, and I work in this industry, man. I've been in finance my entire career. I have worked through all of these different mortgage companies, and I really am kind of kicking myself because now that I see behind the curtain, I see how it all works. I mean, at the end of the day, everybody else is ripping you off. I don't know how else to say it. So if you're in a position where you're wanting to buy a home and you know you need to get financing, maybe you've tried to get financing and you've been told no. That's the other thing, is like, on top of being able to offer the best rates and the best deals, I also have more options for unique scenarios to help the people that I actually want to help. The self-employed person who didn't report enough income because of all the expenses that goes along with self-employment, and they didn't want to have to write a fat check to the IRS, right? I get that. I'm a small business owner myself. But when it comes to apply to that mortgage and then you don't have any income on paper, it's disheartening. And then you think that the system is rigged, and then you're like, should I even be doing this? I have so many loan programs for self-employed individuals, for people that, don't show income on paper. Like, just know that there are alternative options. With over 280 lenders to choose from, I can usually find something that works. And if I can't, I'll tell you, and I'll just be honest with you. I'll be like, I can't find a solution, here's why. If you work on this thing, or if you save a little more money, or you get your score up 10 more points, then you can qualify for this one and it would solve your problem. So that's what at the end of the day, it's all needs based. If you need to buy a house right now, you've been told no, or maybe you don't think you can and you're renting and you're just not even sure how to go about the process. That is what I help with. That is who I help. Did you know that I get paid a percentage of a commission based off of my loan amount? So the bigger of a loan amount I do, the more money I get paid. Wouldn't I want to go after those higher dollar ones? I guess I could do that if I loved money that much, but I care more about the people. I love helping small business owners, first-time home buyers, because that's who I am. And this is what's worked for me, and it's made me a decent amount of money, and I think it can do the same for you. So if you'd like to know how that works and what your situation is and how much you could qualify for, it's really, really simple. What are you waiting for? You need to buy a house? I've got the best rate, got the best fees. If you're a loan officer and you are tired of ripping people off, give me a call.